And we have so many client stories of this. Like Joey was a real estate agent. She had her LLC because she thought that would save her money in taxes, but she never had her S Corp. And so we were able to go back, save her money for the last 3 years. She texted my husband and she's like, oh my gosh, I love you guys so much. If this keeps up, I'm going to get a...
Welcome to Life Changing Money, a podcast all about one of the most taboo topics in the world, money. I'm your host, Barbara Strehans, and we're going behind the scenes on business owners' journeys to money, success, and wealth. Let's get started.
Hello, and welcome to another episode of Life Changing Money. It is a solo episode today because I'm going to be talking all about year-end tax savings. I don't know why, but all of you always wait till the end of the year to start thinking about saving money in taxes. So every single year we put out a year-end tax savings masterclass, and this year is no different. And so you can sign up for our year-end masterclass if you go on our social media at Your Tax Coach, or if you follow me at Barbara Strehans, you can go there as well. Just comment year end and I'll send you the link to our free masterclass. But let's dive in to how you can save before the end of the year. And if you do nothing else before December 31st, you need to do this. If you are not an S corporation yet, and you have your LLC or your C corporation, it's probably time to start thinking about switching over. I talk about S corporations a lot because there's a lot of misinformation out there by accountants that just don't know what they're talking about. They don't want to deal with the S Corp applications. They don't really know how S corporations work. They don't want to file S Corp tax returns because they are more complicated than a sole proprietor return or a partnership return. So an S Corp can save you $30,000 a year so easily because it gets rid of the self-employment tax. Self-employment tax is 15.3%. So think about it. On $100K of income and you switch over, you're saving 15 grand. 15 grand in taxes. Like that's a family vacation to Europe and getting yourself a designer bag while you're there. Like that's a lot of money. And so start thinking about S corporations. But I also want you to start thinking about, okay, it's the end of 2025, going into 2026. What are some expenses that I know I'm going to have next year? And if I know I'm already going to have them, why not buy them now before the year is over? For example, let's say you know already that you're going to be traveling to LA and Scottsdale and New York for some business trips. Well, buy your plane tickets before the end of the year for those places. You can also book your hotel. You can prepay the hotels, but whatever travel expenses that you think you'll have in 26, buy them in 2025 so you get the expense now. When you get the expense now, you'll save money on your taxes in 2025. So you don't have to wait until April 2027 when your tax returns are filed to actually save the money in tax. Now, prepaying expenses can be so much more than just the travel expenses. That was just one example. If you're a brick-and-mortar business, let's say you're a real estate agent and you have a physical real estate office, or you're a chiropractor, so you have an office that you see patients at. You can prepay your rent up to 12 months. So if you already know, okay, I'm paying $5,000 a month in rent, why don't I prepay it in December for all of 26? You could prepay $60,000 of rent in 2025 for 2026 and save yourself like $25K in taxes. If you own your building, some of you might be like, okay, cool, but I own my building. Well, if you own your building, even better. You should have the building that you own in a separate LLC than your active business. First of all, your active business should be an S corporation. And then your rental LLC should be a separate LLC always. You never want to mix your real estate with your active business because it's a huge liability. If your business were to get sued, they could also then sue you for your real estate, or vice versa. If a contractor trips at your properties while they're rehabbing it, they could sue you for your business. So always keep them separate. And now that they're separate, your business can lease the office from the rental LLC. It creates a rent expense on your business, income to the rental LLC. But remember, when you have an investment property, you can take depreciation. So that depreciation should offset the income that you're getting for rent on that side. So you still have a big rent expense on your active business tax return, which means you can also prepay that rent for another 12 months as well, the same as the person renting from a third party. If you already know, you're going to be paying for professional services. So whether you pay your attorney monthly or you pay obviously for bookkeeping and tax strategy and tax preparation, if you're one of our clients or you should be one of our clients, you can prepay. You already know you're going to have to pay that next year. Why not pay it this year? So we actually send out all of our invoices in November for all of our clients because so many of them want to prepay before the end of the year. It's kind of bad for us because we have to claim a bunch of that income early, but it allows all of our clients to claim all those expenses early for their tax preparation, tax strategy, bookkeeping, what have you. Some more professional services that you probably will pay for next year are going to be for coaches that you might have. So if you already know, like, yeah, I'm going to renew with this mastermind, or I'm going to attend this retreat, or I'm going to go to this conference, then prepay for all of those things now. Plus, you're getting all the credit card points earlier, so you can start planning a personal trip with all of those business credit card points. Like, that is the true hack, is to put all of your expenses, business expenses, on a business credit card, get the points, and then use those points for personal use, for personal vacations. Continuing education, we all, or a lot of us, have to do that every single year. So prepay for those. And then a lot of times for all the softwares that we're paying for, this could be for software like your Gmail or Google Suite. It could be for Canva or your CRM system. Well, you already know you're going to have that for another year. Just contact the software company and you can prepay those for the next 12 months as well. So the goal here would be to always accelerate your expenses. So bring them sooner. And then in the last quarter, if you can, defer your income to Q1 of next year. Because the more you can defer your income to next year, the less income you have to claim for this year. Let's say you invoice your clients every single month. Well, maybe in December, you're like, I'm not going to send out those invoices until the end of December. And then maybe some of those people won't pay me until January, because then that will lower your income for 2025. You'll pay less in taxes. So accelerate the expenses and move the income to next year. Once you've done all of that and you've thought about all the expenses that you could prepay for 2026, then you should also start thinking about your retirement accounts. Because every dollar that you're putting into a retirement account goes to yourself. You're investing in yourself. That is still your money that you get to invest. It is your money that will allow you to retire one day. It is your money that will get you out of the hustle and daily grind every day. And just like if you had employees, you would probably offer them a retirement plan, like gift that to yourself. And every dollar you put into that retirement account also could save you 40, 50 cents on your taxes. So let's say you threw 20 grand into a retirement account. And if that saves you $9,000 in taxes, like, hello, not only did it save you $9,000, you still have the $20,000. It's just in a retirement account. It's in your own accounts and it's going to grow for you tax-free. And then it'll be there for you at retirement. And you're only taxed on it as you take it out. Now, don't let your accountant or your financial advisor tell you to open up a SEP. I don't like SEPs. That's a whole different podcast episode. But if you are getting a retirement account, hopefully it's a 401k, a solo 401k, a defined benefit plan, or a cash balance plan. I also want you to start thinking about how you can utilize your family members to save you money in taxes. So have you paid your kids for working in your business this year? Have you hired your spouse? Have you added your cousins or best friends or parents to your board of directors? These are all ways that can help you shift income to lower tax brackets and or shift income to tax-free brackets. And if you're not already doing that, you need us for your tax strategy. We'll walk you through exactly how to do that for every single person in your family, for every person that you love and you want to support. And we won't do it for the people you won't, don't worry. So utilize your family members as much as you can. And then you want to utilize the real estate in your family. There's something called the Augusta Rule where your business can pay you personally for use of your house every single year. Now, this house cannot be otherwise rented out. So this cannot be a Airbnb property that you own. It cannot be a property that you otherwise rent out to long-term tenants. This is going to be for your personal residence. It's going to be for a second home that you don't rent out somewhere else. It could be a family home that a lot of your family members share, but remember, it can't be rented out. So your business is going to pay you personally for use of your house. Maybe you have a content day at your house, or you have a board meeting at your house, a team meeting, a client event, podcasting studio. There are so many ways that you can use your house in your business. And when you do that, you pay yourself fair market value rent. And if you do that for 14 days or less per year, you can get all of that money tax free. So let's say you live in a bougie area in a bougie house and you looked up a house on luxury Airbnbs and it showed like $2,000 a night. And you found 10 days in your calendar where you could rent out your house to yourself. And so now you just shifted $2,000 times 10 stays, $20,000 to yourself completely tax-free. And you can do that over and over again every year. And you can do that over and over again with a parent's house, with a family home, with your sister's house. Use the Augusta Rule appropriately. Use the fair market value rents. Make sure you have the documentation because there does need to be a lease agreement. The money needs to be moved over. You have to document what the usage was for. It has to be reported on your tax returns correctly and on your profit and loss correctly. So don't just like do it because you're following TikTok advice online, but it's a great way to get tax-free money out of your business. And we have so many client stories of this. Like we have so many real estate agents that come to us at the end of the year and like, if all we had to do was switch them to an S corporation, like we had one of them and Joey, oh my gosh, I love her name, was a real estate agent. She had her LLC because she thought that that would save her money in taxes, but she never had her S corp. And if she had her S corp for the last 5 years, it would have saved her over $200,000 in taxes. Like it's crazy to me that accountants are not recommending this stuff. And so we were able to go back, save her money for the last 3 years. We're allowed to go back 3 years only, but saved over $200K just from that. We have clients that implement their family members and can save tens of thousands of dollars a year on taxes. We actually just had a client, she texted my husband and she's like, oh my gosh, I love you guys so much. If this keeps up, I'm going to get a YTC tattoo on me. And I was just like, oh my God, that is my next business goal. Like if someone got a tattoo of like your tax coach or our logo, I'm like, that's how I know I've made it. Okay. So who wants to be the first person to get a tattoo on themselves? I'll give you some pretty sweet swag. I mean, maybe you'll need swag for life because you have a tattoo on yourself forever. But if some of these strategies piqued your interest, I would love to see you at our year-end masterclass. It's totally free. It's in December. Just comment year-end on any of our socials and you can get the link there. And if you're a business owner making over $200K a year, you need to talk to us about tax strategy. So you can go to yourtaxcoachscheduling.com and schedule a complimentary call with my amazing husband, and he'll go over with you if it makes sense or not to use us for tax strategy or tax preparation or clean up your books, what have you. But thanks for listening, and I'll see you next week.
Thank you for listening to this episode of Life Changing Money. Don't forget to subscribe, and I would love if you left a review and shared it with your friends. See you next time.